Okay, long time. Let's do a YouTube video. So it's been a while. As you know, I've been quite bearish on the Nasdaq since June, July, and I was warning of this move on the 22nd of July, and since then the Nasdaq has completely fallen off a cliff, and I don't think we are done yet. We'll go through the Nasdaq, the major markets, and we'll go through Bitcoin. If you want to know how I look at these markets, how I analyze the markets, have a look at my Shopify store. Use a discount code, very cheap considering the amount of value there, and the accuracy of my calls. Now let's go into the Nasdaq first. So it's bounced off this long-term trend line here from 2008. However, that trend line will eventually get broken. We've got Facebook earnings today, Titanic reports on Thursday, and then we've got the election. So this is not a time for investors to be getting excited. You know, when the VIX is low, investors are good to go, but when the VIX is high, they need to fly, and it's at 24 right now. So it's still going to remain elevated for the foreseeable future, for at least this week and next week. There will come a point in time where I'm sure stocks may be a good buy, but for right now, it's a trader's market. Now, it was always going to catch support around this sort of area, which is previous support way back in the early part of this year. But overall, honestly, my take on the Nasdaq is that it could go all the way to this sort of level, 5,000, somewhere in this sort of region, and that would also correspond with the 38.2 fib. I'm very interested to see if it tags the low from May 2000, the tech bubble high. That's my biggest interest, to see how low it goes. Now, at the end of the day, with the Nasdaq, it's a modified market cap weighted index, right? So it's not price weighted like the Dow Jones. So, and these large tech stocks have got lower to go. So on Amazon, let's have a look. On Amazon, you know, and once again, I've been warning of this ever since it got to here. I mean, it exactly hit my target. So I had all of these targets set up. We all made a very good sort of move here, and now it's coming back down again. I see no reason why Amazon can't tag these lows of 13.57 and eventually end up filling this gap. I believe there's a gap. Yeah, there's a big stock gap here of 969. It's just gapped up basically $100, and that gap has never been retested. So I see no reason why Amazon can't go to 1,000. So you can take off another 150 billion off Amazon's market cap. Facebook, they have earnings, so it's very much a binary event. This move here occurred about 2 days after my Nasdaq crash video. That's the single biggest stock drop of all time. So that's the single biggest move in human history. So obviously that's not normal. So any investor looking at that, there should be massive alarm bells going on that this is not an investor's market. Short term, in a binary event, yes, it might go higher, might even tag this sort of trend line. Either way, it's very risky to have anything to do with Facebook here. It's caught support of this long-term trend line that I had drawn from a while ago, and also horizontal support. Very risky to be trading this. It might go up, might go down, no one really cares. The overall take is that there's still lower to go. It's not quite tagged my 115 target. If it breaks down below that, 89, so it's really not a time to be buying. So you can take off another 50 billion off that. Google, there's a stock gap here at 886, which it hasn't quite hit yet, and there are lower gaps here somewhere as well. I forget where the other gap is. I believe there's a gap here somewhere. I'm sure there is. That's been filled. Yeah, that's the one that we're waiting for. Yeah, so Google I can see going lower. So and then obviously Apple, very difficult. You know, if you're going to short anything, you don't really want to short Apple. It's a very you know, it's a very high market cap stock, and everyone loves it. But I've got it going down. I mean, I've got it as an ABCDE failed breakout to the top side. It's gone off. It's trapped all the longs, and now it's going to come back down. So if if Apple doesn't report good earnings on Thursday, I can see a quick move down to the lower end of this channel to around 182. Then if it continues to go lower, 165, and then there's a chance it could go as low as this. So it's very risky, but these big stocks, and then you can take Netflix as well. Where's Netflix? Netflix is going to go to 235, and if that breaks, possibly even 135. But let's take every step as it comes. So because Nasdaq is a market cap weighted index, all of these moves on these major FANG stocks, that's at least another half a trillion coming off the Nasdaq. So I don't see any reason why Nasdaq should stop around these sort of regions, and I can see it going, like I said, into this sort of box, which will be the major support level from 2016. So essentially all the last 2 years of gains are gonna be wiped out eventually when all is said and done. So, and for me, the key area that I'm interested in is what happens when it gets near to this high here of 4780. So yeah, we're not quite done yet, and really it's not an investor's market. And like I said, I was warning of this way back in July, because Fibonacci and Elliott wave, if you know how to use it, you can really predict a lot of things well ahead of time, and obviously there's a lot of money to be made out of that. So that's the Nasdaq. Looking at the Qs, I think they bounced off 166.66 the other day, which is interesting. So you should definitely keep watching this video. So yeah, I mean, it's forming a very bearish head and shoulders pattern. That's the way I see it. If you go on the daily, you can just see it carving out a very interesting head and shoulders right here. So something like that's going to happen. Add that distance onto here, and you can project. Like I said, I can see the Qs also going into this 120 to 90 sort of region. Now, obviously, nothing moves in a straight line. You would be silly to short right now, given the amount of movement down that we've already have. It's probably just going to chop around. I don't know, but at the end of the day, the shorts are now massively taken over this market, and the longs have all left. I mean, they were leaving all here, so that's why I put such emphasis into volume. I could see there was a massive weakness in this market way back in June and July, and that's obviously when I did that video. So you know, my job is only to show people the path. Is up to them to walk it. So but I can see the Qs when all is said and done to get into this sort of region. So that's my take on the Nasdaq. So yeah, we've still got lower to go. There's not been any capitulation or panic, so good luck if you're holding tech stocks. You'll be broke soon. Okay. And then looking at the Dow. So sorry about this. It's all a bit of a mess, but otherwise you can get the idea. You can get the idea that, yeah, that's my target. I mean, it's all a bit of a mess, but I'm not going to clean it up. We're definitely going to tag these lows from what's that, 12th of February. So obviously we've had some quite we've had some quite big down days here. So you know, that sort of down day was we've had this down day here, so quite violent sort of days here, but it's just dropped by over 1,000 points in the space of a day. So we've had quite big moves. So the way these expanded flats work is that they have to tag these lows, and there are two counts. It doesn't really matter which count you take. Either wave 3 topped out here, or here it's an expanded flat topped out here. We're going down in either 5 waves or 3 waves, and the Dow as a minimum will go down to 23.3, and if that breaks, I've got it going down to around 21.885. And obviously if it goes lower than that, we're going to end up tagging these lows. But the Dow should catch support sooner than the Nasdaq. Nasdaq is really going to have some problems now, because it's made more of a clearer 5-wave pattern. And with the SPX, so where's my SPX targets? Yeah, so with the SPX, my target is around 2,500, and then if that breaks, you're going into this sort of region, 24 and 23. So it's all an expanded flat pattern. So yeah, it's really not an investor's market right now. A lot of risk to the downside, and the VIX is still very high, very elevated. So there's no need to be buying in these sort of regions. We might get a pullback in the VIX before the election, but still the volatility is still very high. So any movement above 20 implies that there's a lot of volatility still here to come. So that's my take on things. You know, that you can just take that off. That's not really relevant. So yeah. So that's the Dow. So really, the concern is the Nasdaq. Really, I think that's my biggest concern. So that's the best bang for your buck if you're gonna, you know, short anything. That would make the most sense. And you know, there are various counts here. There are various counts. That could be a 1, 2, 3, 4, 5. We're going to go higher. That could all just be an A, B, C running flat, and it's all a 1, 2, 3, 4, 5. We're going to go higher, or that's an A, B, C, and we're just going to fall off a cliff, or it's made an ABC 1, 2, 3, 4, 5, and we're going to fall off a cliff. Either way, short term, medium term, whichever one of those four counts is going on in the Nasdaq, it's massively bearish. Short term, medium term. Whether it does catch support or not at some point in the future, that remains to be seen. But either way, why would you not be in cash? Cash is the best thing to be in right now, because you're not exposed to the market in tech, and you can take advantage once this market rebounds, if it ever does, on the Nasdaq. I mean, I'm running a 19% chance that it has topped out for a very long period of time. But there's still an 81% chance that it hasn't. So I've given you my counts. But either way, short term, medium term, it's going to go down. And if it ever tags this low from the tech boom from 18 years ago, I'm very interested to see what happens at 4728. Might not get as low as that, but don't be surprised. This market can surprise to the upside, and it can surprise to the downside, as you found out with Bitcoin. So yeah, and then you know, Microsoft, Microsoft might even tag these lows off 57. I don't really look at Microsoft. Yeah, I mean, it's just falling apart through this channel, but there's no real volume, so I won't be surprised if Microsoft has quite a nasty move down as well. To you know, these sort of areas, maybe 84, but yeah, I'm not really looking at Microsoft. It's more the other stocks, but yeah, Nasdaq is not something where you want to be right now. So looking at crypto, yeah, so you know, we're finally getting some movement. It's been moving in a horizontal range for quite some time now. That's never happened before in human history. So obviously a very, very manipulated market, which was always going to happen once these futures came in. But there you go. There's not much you can do about that. So I'm still waiting for this key level to get broken, this 61 to 59. Obviously, there's a lot of volatility in the major markets. You'd be a very brave buyer of Bitcoin, knowing what's going on with everything else. The US dollar is still moving up towards 116. As I said last year, it was always going to happen. So the way I see it is, it's still a risky investment, and we're waiting for some kind of shakeout, some kind of breakdown, and then we might get some sustained sort of rally. The way I see it, it's not bullish till it breaks 68 and it catches that as support, and then it starts to move up. So nothing's really changed with Bitcoin there. I think if you spend too long looking at the Bitcoin chart, you're missing opportunities elsewhere. And in the major markets, I mean. And looking at Ethereum, it's not really bullish till it breaks 250, treats that as support, and then it starts to move up. I've still got lower targets going here, here, and here. And then ETH against BTC. Once again, nothing's really happened, and it's not tagged these lows yet. It's still not tagged this 23,000 sats low. So I see no reason to be jumping into this crypto market. This US dollar is obviously moving inverse to Bitcoin, and I mentioned it before. I'm not going to bring it up again. The US dollar is still continuing to go stronger and stronger, and I think the euro's gonna, well, I don't think anything. I think the euro, I've been warning of this for quite some time, that's gonna go significantly lower. So the euro, I mean, overall, dollar is still very, very bullish, and eventually next year, in the next 3 months, we're going to tag these lows almost certainly. I mean, we're not too far from that. It could even happen before the end of the year. We're going to tag these lows, 103. Then I've got a target of 115 before a massive, 30-40% crash in the US dollar. So euro dollar obviously will move inverse. So I've got euro dollar going to 110, 108, and eventually to somewhere near parity. So that's a great time for Americans to have a nice holiday in Europe. Okay. So yeah, that's my take. Spiders, property, no one cares. Oil. So yeah, I mean, we had a look through all of these group requests. So we had a look at Shopify, MU. I mean, all of these tech stocks are getting hammered. So tech is the market which you want to be shorting, and you definitely don't want any long exposure. As I said, there are 4 counts on the Nasdaq. The way I see it, there's a 19% chance that we've topped out for a very long time, as in decades. But if that's not the case, there's an 81% chance we still might go higher. But there's still more damage to be done on the Nasdaq, so we've not quite had that washout and that capitulation. So at least another $1 trillion of market cap is going to come off the Nasdaq, which should take it towards that 5,000 level. These smaller stocks like Micron, Shopify, they've all formed head and shoulders tops, and we were getting in here, and then obviously trading that to the that's a very good short, isn't it? So I've still got these going lower. Shopify we had a look at. So it's not just the FANG stocks, the other stocks are going to have some serious time. So Shopify is going to go to 95, and then it's going to go to 76 after that. Things like Roku are going to have quite a hard time. So like I said, you've got to be very careful trading this market. It's very, very oversold right now, so quite possibly we might get a some sort of bounce, so you've got to be very careful with that. The count in terms of Elliott wave is very hard on the hourly chart, but you could run all that as some sort of A B C correction. And now before the election, they might just pop it up, trap, maybe make a bit of a wedge pattern. Maybe it'll go back up to retest 68.90, maybe even as high as here, then it will go down. Either way, it's very risky to not be looking at this market every minute, because it's moving more in 5 minutes now than it ever did in the space of a week back in April, May. So you've got to be very, very careful. For those of you who are trading this market, just the one thing to mention, sorry about this, I'm just sort of running through. Obviously it's broken also the 200-day moving average, so a lot of hedge funds have been selling on this, and it's now closed significantly underneath that for a long period of time, which means it's obviously very, very bearish. So that's not a good indicator. So just a couple of trading techniques. I mean, it's very, very risky. So you just need to use some sort of moving average. I'm using more horizontal supports and candlesticks and volume and Elliott wave and fibs. But generally here, if you're day trading this, you'll become very rich or very broke in record time. So you just need to be looking at it on a very short-term time frame and just using a moving average. It'll never get you at the top or the bottom, but as long as you catch 80% of the move, then you're fine. So if you have a look here, I mean, it's moving so violently, you can even use a 3-minute moving average and just use something like the 8 moving average. Also, you can use the 8 crossing the 20, 4 crossing the 8, stochastics. There's so many techniques that you can use. Like I said, you're never going to catch the bottom on the top, but as long as you catch the bulk of the move, you want to go with the trend, because the trend is always going to keep you in. Now, we know in a bear market, it moves very violently with these short squeezes. I mean, that's a 200 pip move in the space of 15 minutes. So you've got to be watching out for that. And good knowledge of volume and candlesticks will have got you out of that trade. But even if you were just using a moving average, the minute it broke above this, you would have been out of the trade. So just to highlight the point, let's say you take that swing low to that swing low, though this is a 3-minute Nasdaq 100 from 5 o'clock till 7:45. So in 2 hours it moved 278 points. You could get in on the 8 moving average here, and you would have got out on a break here. So rather than you getting 278 points, you would have got I don't know, how much is that? You would have got 194. So you would have got 2/3 off the move. So if you want to participate in this market, you've got to be very good at reading charts. And I don't think trading a short squeeze is for 99.9% of people. Only very high risk people will be trading this squeeze. I mean, obviously I do it because it's just it's 200 pips in 15 minutes. But for the average investor, if you want to go broke, you should try catching a knife. It's a good way to go broke. So as you can see, it trends really well when it gets moving. Once again, I can show you another example. I mean, it doesn't have to be the 8 exponential moving average, you can use any technique that you like. I mean, let's just pull up a 20 moving average here. Once again, you know, I don't really use moving averages. I just need some indication of trend. But for those of you who are beginning, so we could say, look, every time the 8 crosses the 20 exponential, we go long or short. So let's just try that, and you can experiment with this. So once again, we're on the 3-minute moving average here. So, you know, obviously there's going to be a lot of fake signals, but eventually you'll catch on a good trend. The 8's crossed the 20, ride it all the way back down again to here. 8 crossed the 20, go short here, and you get out here. Obviously you've missed this big short squeeze, so you need to have another technique of getting out. But that's just one of the ways in which you can do it. But either way, it's best to trade with the trend. No one should be catching knives, because you'll end up blowing your account. And like I said, the way I do it is I just mark out the key levels. So, you know, very, very simple. You just mark out the key support levels. So obviously that's a key level. That's obviously a key level. So I just mark out the key levels, and also obviously I've not done that right, but you get the point. Then I just plot out the fibs. And then I just use that as my guide as to where price will catch support and where it will go up. And then I look at volume climaxes. So, you know, if you can't read candlesticks and volume, you're never going to make any money regardless of Elliott wave and fibs. So, you know, don't get too fooled by people who only use fibs and Elliott wave. When you're trading, you need to have knowledge of everything. But anyway, day trading aside, I think Nasdaq's going to basically fall off a cliff. So I don't think it's done yet. And like I said, I expect another $1 trillion of market cap in tech to be coming off. So when all is said and done, so really, Nasdaq, I'm interested in this sort of 5,100, this sort of area here. And it won't go in a straight line. It'll just do this. It'll do this, and then eventually it'll go down in here. So yeah, if you're gonna short anything, you short tech. Okay, so right, so we'll wrap it up there. So good luck to whatever you guys are doing. Like I said, it's a very volatile time. It's not time for investors to be getting too excited. Have a look at my Shopify products and how I predict everything. Have a look. Use a discount code. I'm sure there's one flying around. Bitcoin U. I think it's 50% off. Actually, it is 50% off, and I will be increasing these prices soon as well. So take advantage of that. But yeah, tech is not something where you want to be, and I think crypto, for me, it's not a buy right now. I'm just waiting for that capitulation, and yeah, very exciting and very volatile times, and it's certainly not something for any investor to be getting too excited about, but traders will. Okay, I'll wrap it up there. Hopefully I'll do another video in the next couple of days, and we'll take things from there.